Hi friends, once again welcome back to Roji's Share Tips. In today's video, we are going to do the share analysis of Coal India Limited. On the first place, the reason why we are doing the share analysis right now is the company share price has gone through a correction. And secondly, the company has a track record of issuing high dividends. The business model of company is mining and manufacturing of coal, and it is the largest coal manufacturer in India. This company's business has very good growth potential at least for another 5 years. The reason why I say 5 years is after 5 years there can be a strong influence of electric vehicles in the market. So we don't know about that situation after 5 years. So at least that 5 years our money is safe in this company. Market cap of the company is 1,05,075 crores, showing that it is a large cap stock and the company is firmly established in the market. Also, Coal India is an FNO activated stock, which means it is traded in very large volumes. And this company can provide consistent returns in terms of dividends, which means you will be able to make some permanent revenue in terms of dividends. Current market price at 168, which is 62% discounted price from its all-time high of 449 happened in 2015 July. And also we can see that the share is at a 23% discounted price from its 24-month high of 217 happened in 2018 December. Also you can see that the book value is 59.3, which is 35% of the share price. That is a good indication. The face value of the stock is 10 rupees, shows that a stock split may be possible, but considering the very slow appreciation of share price or even depreciation of share price, we cannot say anything in 5 years, but maybe in 10 years it is possible. The dividend yield is 9.38%, which is very high, shows that 938 rupees returns per year for every 10,000 rupees invested. Bonus history shows that no bonuses has issued yet, which means holding this share for bonuses doesn't make sense. But if you look at the 12-month returns, it is 34.29, mainly because of the COVID recovery. But if you look at the 5-year returns, minus 48.28 and maximum 11 years returns at minus 51.8, shows that the company's share price is going in negative trajectory. But if you look at the inventory turnover also, you can see it's 1.06, which is low. But if you look at the pledge percentage, you cannot see anything, which means company hasn't pledged any of its shares. But the main reason why we are recommending this share is only for getting dividend returns and not in a share price appreciation. So all you have to do is whenever you find a good price, enter in some quantities. Earnings per share is 20.06, which is very high, and it is to almost 12% of the stock price. That is very positive. If you look at the ROE, you can see it is 37%, ROC 46.1, ROA 8.17, all looking very good. Debt to equity 0.16, which is very good. Debt to profit 0.46, which is also very good. If you look at the promoter holding, it is 66.13, that is showing high confidence of promoter in this company. If you look at the share of DII and FII, you can see 22.0% and 6.74% respectively. That means the company is attractive for investors. Stock PE is just 7.62 against industry average of 22.4. which means company is largely undervalued, and consistent but marginally growing profit in 11 years shows that your investment is safe. So if you look at overall, you can see the financial parameters of the company is looking very good, but in terms of share price appreciation, that is not looking very good. Reserves of the company is 30,355 crore, which was increased from the previous year value of 25,994 crores, showing that company has sufficient reserves to handle any kind of economic shocks. The cash flow is positive, and we can see that debt is also consolidating. This is a very good indication of this company. If you look at the chairman and managing director of this company, it is Mr. Pramod Agarwal, whose age is between 52 and 60, and he got a BTech degree in civil engineering from IIT Mumbai, MTech in design engineering from IIT Delhi, and he is also a 1991 batch IAS officer. He also has 28 years of administrative experience in various public sectors and in government sections, which means this company is headed by highly experienced and qualified as well as a talented person. If you are looking at the number of subsidiaries, you can see there are 11 subsidiaries as per the report, 10 in India and 1 in Mozambique, and information is available in annual report PDF page 52. Now if you are looking at the organization's headquarters, it is located in Kolkata, and it is mainly because the coal mining states mostly available in northeastern part of India as well as in the eastern side like Odisha, Jharkhand. That is the reason why headquarters is located in Kolkata. You can also see that company has 59,000 permanent employees, shows that company's size and scale is very high. Remuneration paid to the top directors, 6 members, is only 3.1 crores, shows that only 0.1% of the profit is taken as director's salary, and information available in annual report PDF page 112 shows that company is not mismanaged. If you go to the PDF page number 52 of annual report, you can see the subsidiary information available here. So if you are interested, you can see all this information. Now if you go to page number 115 of annual report, you can see the director's salary information. The company has been founded in the year 1975, which means it has completed 46 years of existence. And this happened mainly after the Coal Mines Nationalization Act passed by Indira Gandhi government in 1970s. Now if you look at the recent financial results, you can see Q1 2021 net profit is 3170, previous quarter Q4 2020 is 4587 crores. But if you look at the previous year same quarter compared to the Q1, it will be 2080 crores, which means on year there is a 52% rise. But if you look at the quarter on quarter, you can see a decline of minus 31%. So overall the result is positive. 2 dividends has already been issued this year as a total distribution of 8.5 rupees. No more dividend is expected this year. Again, the company has announced a 10% increase in the prices, which means the company is expected to give good revenues in the coming quarters. And also you have to note that Q2 results are coming very soon, that is on 12th November, that is within 2 days. Now if you are looking at the technical analysis on daily chart, you can see the 200 exponential moving average is clearly below the price line, shows that chart looks bullish. But if you look at the 48 and 13 exponential moving average, you can see a bearish crossover. It's almost happened. And if you look at the MACD, you can see a negative value and also it is pointing downwards. Now if you look at stochastics, you can see even though it is somewhat showing upwards, but it is also showing a flat position here. So we cannot make anything from stochastics as well. Now if you look at RSI is neutral. So based on technical indicators, what I understand is price is clearly heading for a short term correction. But considering the fact that Q2 results are about to come, that is a fundamental event is on the doorstep, we cannot completely rely on technical analysis right now. So we have to see the results, only then we can confirm whether the stock will go up or down. But if the fundamental event didn't came positive, the stock will clearly head for a correction. Same thing is mentioned here as well. 200 EMA looks bullish, but 13 and 48 EMA looking bearish. Current price is only good for long term purchase, and MACD is just negative and showing a short term bearish signal, expecting the share to go for a short term correction and consolidation. But upcoming Q2 results will confirm the short term trend, so we need to wait and watch it. Stochastics is looking neutral but very near to the oversold zone. RSI index is looking perfectly neutral. Based on technical indicators, it is 43% bullish and 57% bearish, which means it is overall bearish. And hence the Q2 results can push the stock in any direction, and the fundamental event is about to happen in 2 days. We need to wait and watch, and technical analysis cannot be taken into consideration completely. Follow buy on dip strategy for long term. Support can be found at 161, 155 and 148 levels. Any price around or below 160 will be fair entry only for long term. Between 120 and 140 will be the best entry for the stock. Minimum and maximum long term portfolio allocation is 1% and 1.5% respectively. Buy 5 to 8 quantity for a portfolio size of 1 lakh. That will provide you ideal allocation. Immediate target can be taken as 200. Medium term target is not applicable, but in the case of long term target, a 220 to 250 is possible, and the main target is dividends. But we need to consider one thing, that we must enter in large quantities only when we find an appropriate price. If the results came positive, it is okay to enter right now, but the results didn't came, wait for the correction and then enter. If you found our video really useful, please like this video and subscribe to our channel. Thank you for watching.